Are we in a real estate bubble? Is the real estate market going to crash? Depending on the headlines that you read every day, you might be thinking that's the truth. But I'm here to tell you that that is far from the truth. Now, I might not have a crystal ball, but what I do have is statistics that will give you ease that we are in a healthy real estate market, albeit very competitive real estate market. Hey, everybody, Tim Veigle here with Watson Realty, and I got the data that you've been waiting for. So let me share the screen. We're going to go through it. If you haven't subscribed to my YouTube channel yet, please do so. I look forward to having you on there as a subscriber, and leave a comment. Tell me what your thoughts are. I would love to hear what you think after seeing this data. So let's go ahead and get this party started. And I got the data that's going to make you go, wow. Trust me, it will make you go, wow. Because depending on the articles that you're reading, we are already in the crash, and they are so far from the facts. So different quotes that I've been looking at, and now keep in mind, I am constantly paying attention to the market. I'm on bi-weekly calls, examining the data, seeing the information so that I can give you the information. And although I'm not a magician, it's going to give you some peace of mind that we're fine. So Alta Research has said, we keep watching for it, but there are absolutely no signs of a market slowdown anywhere in the data. If anything, we're seeing the market continue to heat up. So keep that in mind. We're always looking for that to try to predict what's next in the real estate market, but the data does not support it, and that's all that matters. So looking at, and these are in thousands, active listings continue to drop. Right now, we're at our lowest level since January 2021, like literally over 12 months of data, and our listings keep going down and down and down. You have a spike coming at the end of the summer months in Q3, but right now we keep going lower, and that's helping drive the market because we don't have the supply for the historical demand that we're getting. Now, existing home sales, though, hit a 15-year record high. So between the last 3 years. And as you can see, our home sales are still going up. So what that's telling me isn't necessarily that people aren't selling their homes. It's just that the homes are selling so fast that you don't even see them, or you don't have the opportunity to see them. And that's because of the amount of buyers that are in the market. Now, here's an interesting statistic for you. And this just kind of shows you the carryover from a typical month. So look at January to February. Only 6 listings carried over from January to February. And now keep in mind, these data are looking more at the bigger picture of the entire country, but that's how it is in a lot of markets. So we keep losing the carryover data. So therefore, the new homes that are coming on isn't enough to support us. Now, George Batu, senior economist, a manager of the economic research at Realtor.com, with a slight retreat in interest rates, the week saw an advance in housing market activity as buyers sought to find the right home. So we are seeing an uptick from buyers trying to take advantage of these low interest rates. Now, here's a fun chart, and this goes all the way back to 2000. And this is new construction, which you can tell why we're having an issue with inventory today. So these are the homes that started construction way back in 2000. So you see from 2000 going to 2006, we kept going up and up. And then 2006, that's when new construction started holding the bag. So they tapered off. And because of them tapering off, look at how many homes we should have been producing versus how many we were. So it doesn't allow us to have enough inventory out there to be able to sell, which is really what's driving this boom. Now, they are currently picking back up, and you see new construction happening everywhere. But the downside with them picking back up, and even though we have the most starts since 2006, they're still not at the peak of where we were in 2006. So we have a mass amount of inventory that wasn't created during that time frame. Like you're talking, what, 15 years? So that's a big one. And that's one of the issues that we're having is new construction didn't keep up with potential future demand. So Now, Daniel Hill, chief economist at Realtor.com, while new listings started on a somewhat weaker note and have trended below previous year levels since the beginning of 2022, the annual rate of decline has steadily improved over time and turned positive this week. Even after adjusting for storm-related factors, the growth rate in newly listed homes remained positive, 3.2%, suggesting a breakthrough in housing supply. So even though the year started off with less than what we would like, we're starting to see us turn the corner, which could be foreshadowing of what's going to be a very, very active spring season. So, and even like from my report I did the other day regarding data in the greater Orlando area, we even saw that uptick. Now, Lance Lambert, editorial director at Fortune, now more industry insiders are throwing out their previous forecasts and replacing them with more bullish short-term outlooks. Indeed, some experts say the 2022 spring housing market might go down as one of the most competitive in record. So in the short term, we are turning a little bit bullish on the market. And yes, it means there's going to be more competition for those homes that are coming live, which also signals that you need to make sure you have an expert negotiator to help you get into those homes. Now, here's a fun graph for those that do purchase this year or in previous years. They predict the potential growth just based off straight equity in the next 5 years. And this is all based on an average of if you purchase a $350,000 home, is going to be about $89,441. So think about it. You do nothing in the next 5 years, you gain $90,000 almost. Now, what's happening with interest rates and home prices? That's a big question everyone always asks. And they're worried about the interest rates. Now, keep in mind, our interest rates, even though they're seeing an uptick, they're still historically low. So, but recently we saw mortgage rates fall. According to a chief economist at Freddie Mac, Sam Catter, geopolitical tensions caused U.S. Treasury yields to recede this week as investors move to the safety of bonds, leading to a drop in mortgage rates. While inflationary pressure remain, the cascading impacts of the war in Ukraine have created market uncertainty. Consequently, rates are expected to stay low in the short term, but will likely increase in the coming months. So rates are still planning to increase, but because of everything going on geopolitically in the world, it dropped back temporarily, but that's not going to be forever. Now, international uncertainty brought about by the conflict in Ukraine is outweighing a hawkish Fed's fight against inflation. The current flight to safety from equity to fixed income markets is driving up the demand for 10-year Treasury notes and pushing yields down. In turn, this will put downward pressure on mortgage rates. Put bluntly, Russia's invasion of Ukraine is driving down mortgage rates temporarily. So this is just an interesting pressure, but people are trying to be a little safe because I'm sure you look out there and the market's crazy right now. And because of that, it's putting pressure to keep mortgage rates low temporarily, but that won't be forever. Now, if you look at this, this is just a graph for the last 50 years of the 10-year Treasury rate with the 30-year fixed mortgage rate. And they pretty much travel in unison. So they're a little bit off, but as you tell the simple stuff, the Treasury rate for 10 years is a good prediction of which direction we're going to see the 30-year fixed mortgage rate go. Now, Black Knight's December 2021 mortgage monitor, after cooling in the summer and fall of 2021, both Black Knight's home price index and collateral analytics data set show home price growth re-accelerating. Catch that? Re-accelerating in late 2021, early 2022, due to at least in part to the worsening inventory levels across the country. So again, it's demand that's driving it. So price appreciation definitely accelerating. Percent year over year price increase monthly starting January. I mean, look at that. I mean, they haven't filled in numbers for December, January, February on here, but 18% ending the year. I mean, the market's hot. If you own a home, it's awesome. If you're selling a home, you're going to get good penny for it. If Trying to buy a home, be competitive, even though you think you're overpaying, you won't notice the difference in a year. So, and see, they even added in here up to 19. So home price forecasts for 2022, and these are just predictions. The average is saying at least a 6% growth this year. Honestly, I think these growths are going to be a little bit higher based off the way the year started, because we have low inventory. And until we get that going, even though we start to see it turn around, getting more inventory on the market, we still got to eat up the demand that we haven't been able to sell to yet. Now, most recent home for price forecast rises. In December was 8%, February of 2022, 10.3%. So we're hitting double digits, and it's not the same different in the US versus Orlando. The Orlando area is also hitting double digits. So here's a big question. Is today's real estate market sustainable? Or as people like to know, we're in a bubble, we're going to crash. I'm waiting for the crash to happen. Hear that all the time. And there's some people that truly believe it. But when you look at the data, we're not. Point blank, we're not heading for a crash based off what we see. So if you look out there, people think we're currently in a bubble. 77% of consumers do. Heck, 44% of agents do. And you know what? Based off the data, I'm confident that we're not. Now, here are some news headlines. U.S. foreclosures surge in January after end of pandemic freeze. U.S. foreclosures are the highest since pandemic start. You ever heard saying it bleeds, it reads? Well, that's what that is. Now let's look at this. Does this look like surging? Almost 12,000 in January of 2019. 9,600 in January 2020. Now 4,700. We're not surging. If we saw that number up there, I might be a little concerned, but we're not. Now, Executive VP Realty Track, Rick Sharga, it's very important to keep these numbers in context. We are likely to continue seeing large year-over-year percentage increases for the rest of the year. But it's also likely that foreclosure activity will remain below historical normal levels until the end of 2022. Now, everyone prepares for the crash. Here's the data for the crash. The orange is the amount of loans with a credit score of less than 620. Look at the number it dropped off. That's what's preventing us from a crash. More qualified buyers are buying homes. That's it. So everyone here was buying on credit, caused the crash. They couldn't keep up with their expenses. Inventory of homes, nothing like last time either. So 4 years of housing crash versus our last 4 years. See the bump? They went up. They have a lot of inventory. Months on market, month supply. We don't. We're shrinking. So here's a little difference of what's considered a seller's market, neutral market, and a buyer's market. We are way in the seller's market, and that's just a fact. Now, here's a fun one. Foreclosure activity at an all-time low. Everything in the red is over 1 million. 2021, only 151,000. That's nothing. An economist at CoreLogic, Arachnia Pradhanov, said A surge in foreclosures as the forbearance plan ends is unlikely. The very rapid home price appreciation in 2020, 2021 boosted home equity. So basically what she's saying is if you're being foreclosed on, you can sell your home and make money. So you're not foreclosed on. You have options. Foreclosures, short sales are not in those options. So I hope this helps secure things. But bottom line is equity is increasing. We don't have to worry. Everything says we're good. It doesn't mean that there won't be an adjustment eventually. I don't see it in 2022. Probably not going to happen in 2023. We need more new construction to build up homes so that we have homes to sell in the future. That's what it comes down to. We are not there. So, but we are getting better every single month. Until that happens, we are not there. So I hope this data helped. Again, please tell me your thoughts. If you have any questions on the data, let me know. But all the data points to we are healthy, just very competitive right now. So the more you know, the better you do. Talk to y'all later.